Hi, everybody. We are live. It's an exciting time because we're very close to 100,000. Uh, this is quite incredible after all these years being in Bitcoin. It has been a journey for me. Of course, this is significant for everybody, but I have been uh, in the Bitcoin world for almost now. Uh, so it's 13. It will be uh, 12, I say almost 13 years, right? So it's incredible. And I spent a lot of time in the last few days thinking about all the different steps, all the different feelings, all the different emotions associated with all the different cycles. And it's pretty incredible. It feels good and kind of bittersweet in a way, because there have been a lot of things happening in my relationship with my family, with loved ones, my son, ex-girlfriends, and many things were around Bitcoin. Like the relationship with Bitcoin, me being passionate about Bitcoin. Some of them don't, I'm not understanding these uh, things. I had these are cycles, very exciting. They usually happen at the end of the fourth year, right, close to Christmas time, um, the excitement associated with them. But maybe we can cover it another time. I'm going to write a more coherent story of all many different events, many different personal things that happened to me during these many years. It feels like if it were like 100 years instead of only 13 years. Anyway, I would like to hear also your story if you want to write them down in the comments. Anyway, so let's move on. I'm going to activate the chart. The chat. Um, Apologies if I'm using Restream, but I was supposed to stream to many platforms. Uh, and apologies if I still don't know how to use it completely, but hopefully we can figure it out. And you are free to ask any question because I want to make it as interactive as possible. And I'm going also to assume you know most things about the charts. You can always ask because um, basically, there are so many videos that you can watch, in this channel. And by the way, I linked in the comments, in particular in the YouTube video, uh, a discount. So if you come to join our Discord, is kind of exploding. I think we passed already 1,000 people, but it's really great if you can come, and because it's becoming a very active community. We have so many different channels. We have at some point I will show you, in fact, in this video, a little bit of a tour. We have a channel on options, futures. We have channels about not just Bitcoin, but there is like the ghetto. We kind of joke because we are trying to be respectful of the maxi, so we don't want to talk about uh, shit coins. We kind of relegate them in a channel where people can talk about other coins if you like to. So we are not trying to be exclusive, but at the same time, we are trying to be respectful of the maxi and not to be distracted. So people can go and discuss it there. There is a channel about a different type of DCA. We have signals too that are coming, like a kind of an update about the power law. You have the indicators, but we also have these very beautiful charts. We have options we just added, and people are also sharing scripts. Sometimes to improve the indicator, from an aesthetic point of view, but also a practical point of view. We are developing also some kind of a future DCA bot that I explained before in other videos, where basically as the price corrects itself or maybe grows, you open these future positions and then you sell them with a small leverage, but you can do more money on top of just holding your BTC because you're using it as a collateral, and then you can buy BTC. I am not against any of these things. My positions are not uh, fundamentalist in terms of hodling, because we are all hodlers. We hodl most of our coins, but you can take a little bit, put it in an exchange. Is a little bit of a risk, but our days, Bybit, Binance, we are not FTX, right? It's never impossible that some of them, something will happen to this exchange. It's never a good idea to put all your coins on an exchange. But if you do it with a small amount and you can make a little bit of money and buy more Bitcoin, why not, right? Everything is a risk in life. So it's a question of managing the risk. So we have a lot, basically, we have a lot of different ideas, different approaches. It's not just me, it's a community. And we help each other. So right now, as a both to celebrate the 100K event, but also as a Christmas gift from me, um, uh, and sending to certain people, hey, intricate space, uh, nice to see you. And next use also, thank you for all the good things you're saying about my work. That is very kind. And so sending sometime you will receive some email, some DM from me with a gift where you can get 2 or 3 months uh, discount. I'm selecting people that are very supportive, very kind. So that is my gift to you. But for everybody, I posted a 40% discount. You can get it for the entire year, and then it's really a good discount, or for 1 month, 40%. So it's in the comments in the video. Okay, let's focus now on this, on understanding what is going on with the market, right? Okay, so the first thing is this, right? So let me show you this graph that is going to. Okay, so this is it, right? What I do in this graph, I'm trying to give you an entire picture of how I still think everything works, okay? Because we are trying to have like a coherent, full picture of Bitcoin behavior, okay? And listen, this is not a religion, okay? We are trying to be scientists. So, anybody that tells me, oh, Giovanni is dogmatic, I'm not, it's just that I did a lot of work for several years on understanding Bitcoin scientifically. I kind of right now there are several other people that are trying to do that, but and it's great, like Sina, Plan C, but basically I was, and Ben Cohen has done some of that, but I think he was also inspired by my work because all of a sudden he started to talk about this, basically what Ben calls the log fitting or something like that. The non-linear fitting. He has a name for it. There's nothing else than the power law, and he did it just after I posted on Reddit. So I know it sounds a little bit arrogant with Plan B, Ben Cohen, everybody's basically following what they did, but all of a sudden, you know, when I posted my post in um, this was September 2018 about the power law, nobody was talking about the power law. All of a sudden, everybody started to talk about power law, right? But yeah, so my approach is to try to understand Bitcoin scientifically, and this is why it's different from others. My son sometimes makes some videos. He likes TA. It's my son. I let him do it. I don't completely agree. There are some okay things. I mean, some of the ideas of TAs are mostly like a visual aid, I think, almost to show you, okay, if it's following this pattern, if there is a breaking of this pattern, then something happens. But It's mostly a line drawn by hand, and they are very arbitrary, and for sure they are not predictive. Maybe they can tell you that something happened, but they are not predictive. And I'm trying to do prediction. I'm trying to understand patterns. That is what science does. Science is trying always to see if there are very um, reliable patterns. Then we can use these reliable patterns to make prediction into the future. And Bitcoin, yesterday I was arguing with somebody in a store. He asked me, "How are you?" And they answer, "I'm feeling good because Bitcoin is going crazy." And he was curious, right? Because probably heard and said, "Oh yeah, Bitcoin, yes." And they started to. I was trying to orange peeling because that is, if I don't do this, I'm trying to do orange peeling. That is my other thing. I'm trying to orange peel everybody I come in contact with. It. But I was trying to explain him that Bitcoin is unique because he was trying to, oh, I invested in the stock market. I say, well, this is not like the stock market. It's different. It's much more predictable. It's much more reliable. Bitcoin follows pattern. I was trying to do whatever I could, but I don't know if I made much progress. But that was the main message. So this is the picture that we have, right? Now, is it possible this picture will not repeat in the future? Of course, right? The main thing, and I was trying to explain this in the video, sorry, in the video, in my X account today, is that there are really two situations where scientists feel very, very confident about making prediction. One is when you observe cycles. So cycles are often in nature. There are many things that, one of it, in a sense, science started by trying to understand, in fact, even before science, right, is probably one of the most scientific things we did before science. It was trying to understand the cycles of nature. And some civilization came very close, right? Like the Mayas and Aztec, they had their calendars, they were trying to understand these cyclic patterns. We have a 24-hour cycle that all biology is based on. That is actually, by the way, kind of a theme in my life because I started studying waves when I was in my graduate studies. I specialized in these gravitational waves in astrophysics. When I went to neuroscience and I started to study brain waves, but also what are called circadian rhythms, that are these rhythms that all living beings have, that are 24 hours rhythms, circa about 24 hours. And it's very interesting because in that case, it's kind of like a Bitcoin cycles. It's not perfectly 24 hours. Everybody has his own cycle. Some people is 23 hours and 56 minutes. Somebody is 24 hours and 20 minutes. Like twins sometimes have exactly the same cycles. It's unbelievable. And the challenge is, okay, how these are slightly different from 24 hours cycles interfere with, the astronomical cycle that is 24. The sun, and also that is not perfectly 24 because it depends on like 24 is the human social cycle, right? The sun, the amount of light and night, it depends on where we are in the orbit. But cycles are very, very important in human history. They are important in science. There are many things that are cycles. The atoms oscillate and vibrate. There are many chemical reactions that follow kind of cycles. There are a lot of things. And so one of the most important things you learn as a physicist, we have many classes to study them, how identify cycles, how to identify waves, because these are very, very recurrent themes in science. And in physics, we're trying to generalize. We are saying, okay, all the waves, in a sense, they look the same. We have a period, we have an amplitude, we have many things that make them similar. And this is what I'm trying to do here. I'm trying to approach these in the same way a physicist will do. So for me, these cycles are very important. To be honest, I will be very sad if they disappear. because it gives us a point of reference, and I think they are very useful. They bring in, I just posted a few days ago a graph where I showed that during the cycles, price leads addresses, and addresses seems to lead price at the bottom. And it means that, the bubbles are bringing these waves of new people coming in. So there are a lot of nice functions about the cycles. So you can make an entire philosophy, but in terms of understanding what is happening next, I think they are fundamental, and I know some people are disagreeing with me on that. They are saying, "Oh, this time the cycle will be broken. There are all these new things." Look, we're talking about celebrating $100,000 and my memories of being class 2012, 2013, and I went through all the cycles, all of them, and believe me, every single time people say, "Oh, this time is different. This time is different. This time is different." Okay, the first cycle we didn't even have any idea that we were cycles. We had a bubble. We thought that we were not going to have a bubble anymore. Then we had another bubble, and people were shocked, and surprised. The second bubble, we knew that we were possible bubbles, but when people say, "Oh, it's going to be different from the previous bubble," look at this bubble. It looks identical to this bubble. It's very similar, right? Similar patterns that are happening all the time. So I was telling you, scientists like cycles because also they allow us to make predictions. Okay, when you find a cycle, that is one of the time when scientists feel confident that if they repeat, like they repeat, we can know many things. We can know when the peak happens, when the trough happens. We can say something about the amplitude. So other people want the cycles go away. Well, be careful what you wish, because they give us kind of a anchor. It's a kind of a heartbeat. It's a heartbeat of Bitcoin, and it allows us to understand. It's fun, It's nice to see the price, the excitement. The people probably will not be able to take it if Bitcoin. First of all, I think it would be impossible even from a financial point of view in terms of investment. A lot of things. There are reasons why we do Olympic Games every 4 years, or why we do the World Cup every 4 years, right? Because if it was every year, it will not be a big deal. You get a new champion every year. I mean, there are tournaments that are every year, but these ones are very important, right? Because they happen every 4 years, right? You're going to be a champion for 4 years in a row. If they made it every 10 years, it will be probably too long, right? Some of the players will be too old to even play anymore. So 4 years is a good quantity, right? It corresponds to the leap year. That is something interesting, again, with the cosmic cycles, with the patterns of the solar system. And so it's I think these cycles will continue to be there. Everything else right now points to the fact that we are going to have cycles until we have new evidence, because we are still scientists, right? So the nice idea of having something like this that is very well structured, that is based on understanding how everything relates to each other, is that if there is a breaking, like people think it's funny when they say, "Oh, I will laugh at you when it's broken." No, because there's nothing to laugh. I'm doing what scientists do. I'm trying to understand it. I'm trying to study. The cycles have been there. If there is not a cycle anymore, it's nothing to laugh. I will be the first one to know that something is wrong, something is different. You do that, you study these things, not because you're trying to, it's not a religion. People have weird ideas about this. They think that it's a religion. So is it true or it's not true? It's true, and likely continues to be true, because these patterns are difficult to eliminate or to disappear. But if they do, then these tools allows us to identify, first of all, that something is different, because you can compare before and after, what happened for 15 years versus what is happening now, and also to characterize it, how big of a break it is, what is going on, what is the next thing that Bitcoin does. So it will not impact me personally. Some people will say, oh, you say this. Well, I'm telling you all the time, I put different caveats to what I'm saying, that this is my prediction if everything else repeats itself. If it doesn't, then it will be something different. We are scholars of Bitcoin. We're trying to understand Bitcoin. If Bitcoin does something different, it doesn't matter. I mean, it still did this, so it's still valid scientifically to describe the past, but it will help us to understand the future because we can compare. This is how it works. It's not that I am attached to it, to this understanding, and then saying it's never going to be wrong. That is not how science works. If you do a theory, so you are coherent and you're trying to stick to the theory, almost like trying to be honest, but you are not associated with it. It's not that when Newton, like if Newton was around when Einstein, imagine Newton was around, there was somebody that came up with the theory of relativity while Newton was still alive. Newton will be being the first one to be happy because they use his work to build on it and to improve it. Okay, so this is how science works. So but right now I don't see any evidence besides some wishful thinking. So all the people will say, oh, because of this, because you don't know. First of all, we don't know if we will have a reserve. The law needs to pass. We don't know if he's going to pass, but we don't know the impact. We are going to do it over a long period of time. There are 400,000 Bitcoin going back and forth every single day. So I don't see all these things that people are excited about as changing anything. They are just part of what we need to go to the next steps and scale up, right? That is my hypothesis. Now, if I am wrong, these tools will tell us also when and how. And so they are still useful. That is the entire idea. But right now, I want to go, in my understanding, with what we have, that is basically this picture, right? So I showed this picture before. Let's summarize it one more time. Basically, it's like this. And what you're seeing here, what we are seeing here is one of our indicators called the power law band indicator. It has a few components. It has the white line, that is the general power law trend. Then it has this pink line, that is what I call the full model. The full model has 4 components. It tries to tell us where the peaks are. Now, the shape of this curve can be improved. It's not as smooth as is shown here, but it's mostly like to indicate where the peak is supposed to be. And then it has another component, which is the bottom support, because it turns out if you deviate from the trend about 60%, and so this white line really is where the support is supposed to be. But I'm trying to write one single equation because it's all predictive. So this is why I'm trying to write equations so we can extrapolate them into the future. I'm trying to write an equation that tries to have all these components. So it's not perfect. This pink line is supposed to come close to this white line, but it's trying to do too many things. I mean, we can fix it, but right now this pink line is supposed to have the top or the bottom. And also what it does, the amplitude of these waves is becoming smaller. So I'm adding like a decay. Now this decay is not also, due to me imagining things or making up stuff. It's something that it can be observed. If you, so the power law doesn't predict the bubble, at least not directly. There are a lot of things that one could say that strong interference with the power law behavior will create bubbles. So if there is something that happens on a rhythmic way every 4 years, and it's not really a coincidence that is somehow associated with the halving, and we can discuss that. But it does, for sure, it doesn't have to do with scarcity. That is the idea. It's something else. And you can read my articles. I wrote it about. We made a video. But there are also microeconomic cycles. So, for example, there is this production index. It's called PMI, and I made a few posts showing how almost perfectly aligned. I can also show you some graphs about that. In a moment, we can show these graphs. So they have some microeconomical measures that are actually almost perfectly aligned with these cycles. But what we observe with Bitcoin is that the peaks of these cycles are becoming smaller with time. That means probably is being affected less by these microeconomical cycles or other factors, but they are still there, and they are smaller in comparison with itself. Because if you're thinking about other cycles that are happening in other assets, they are much smaller. You can see some of the cycles happening in other assets, but very, very small. They are being less important, but they're still very important, because we're talking about, like, for example, the next cycle will be a deviation from the trend of about 80%. Okay. And how do we come up with this number, 80%? So this is where the projected power law is supposed to be in the future. And I'm drawing here a line that represents where I'm expecting the peak to be, that it should be around November of next year. So we have 1 year of bull. The peak is supposed to be around November. And the way we calculated this deviation from the trend is by measuring these deviations, all the other deviations. Because again, the power law doesn't tell us, oh yes, there is a bubble, but given that we have a bubble, we can use the power law to characterize these bubbles. We can measure the deviations. We can see how the deviation changes in time. And if you plot them in a graph, you plot how big the peaks are. Actually, I was surprised by that, because it's supposed to be all formal. It's supposed to be a very rational behavior. So, okay, maybe they go down, but why they go down in a precise manner? It's something not yet understood. I think one of the clues is that if you measure the deviation in terms of the price instead of the trend itself, then they became kind of similar in height. And so that means the interpretation is, they look big because the price was small in the past. And so if you do it proportional to where the price is, they are not actually that big. They are kind of similar. They are kind of became basically when we were moving, the price along here, and the price was only a few $100, up to maybe 1,200, whatever the peak was. It was much easier to do this than this one or this one, right, or the next one. So it's still kind of proportionally the same in a way. These are the peak of these bubbles. But I included that decay, and these are, so if you plot all the bubbles, how big the deviations are, you see that it's not random. The peaks are not random. They follow a very precise pattern. And you say, look, Bitcoin is so regular in everything that I want to listen to Bitcoin and all the information that Bitcoin gives me. And it's kind of actually, some people think it's arrogant, right, to make all this prediction. Oh, you are trying to listen to Bitcoin. Bitcoin is doing this. Maybe you don't understand it. Oh, this is what Bitcoin like to do. So I'm going to accept it as true and listen. And maybe, it's just a quick, maybe, like sometimes, hopefully it's not a chauvinist joke, but sometimes we, men try to understand what our girlfriends or wives tell us, and we think they say this, and then we don't understand, and they say something else. It's kind of like that, right? It's possible that we think that Bitcoin tell us this, and then it's really something else, right? But right now, my interpretation, at least, of what Bitcoin tell us is that these bubbles are important. They are becoming smaller. Even the decay is regular, and we can use it to make a prediction, because everything else, it's a guess, right? Anything else that somebody will tell us, oh, it's going 300, it's going 400, we're making a guess. So I'd rather do something based on the information, and then again, it's a point of reference. And if it goes higher, I hope it goes higher, and then it will be great. And because we are not attached to it. It's actually the least, is the weakest component of all these predictions. Okay, and so, but at the same time, it's the only rational, only that I know. If you know any other argument, let me know. But so far, it's the only one that seems to be based on some kind of mathematical calculation that makes sense, right? There have been other people. There was this 5.3 theory. It was not really a theory. Their prediction was we already reached the maximum of a cycle. It will be 70,000. It got destroyed by evidence, right? And I already wrote an entire article about saying, no, the evidence is different if you read it correctly. And in fact, I already use the idea of cycles to contribute and tell everybody, because there were a lot of people were concerned that we will never go beyond 70K. And they were asking me, and Peter Brand was also supporting this theory, for example, right? And he has a lot of followers, and everybody forgot that he actually said that. For some time, he was saying, oh, see what happened with many of these analysts. They tell you one day one thing, and a few days later, they tell you the opposite. And one of them will be correct, and people will remember the correct one, and they will brag about the correct one, and nobody goes and check the wrong one. I'm trying to be consistent. I'm telling you all the time the same thing. And if I am right, I'm right. Okay, if I'm wrong, okay, we learn from it. But I'm trying to be very consistent, right? So that is why we still think, even with this very, very bullish behavior that we're seeing right now, that we're going to discuss in a moment, that the cycle will repeat, okay? And the peak will be there at 200,000, or, range, right? Think about a range, maybe close to 180 all the way to 150, right? These range are based on the volatility that is observed. It made simulations that are called Monte Carlo simulations, where we get an entire range. That is the typical possible range. It's not even, it's simply because we're still dealing with something stochastic, right? And so when you add together all the different possible variations in the path, you're going to get a range, and that is the range, anything between 180 to 250. I'm not against going to 300. I think it's almost impossible to go to 500. Nothing is impossible. 1 million, okay, the aliens can come and bring us, all kind of amazing technology. We can go faster than light, all kind of things like that. But, we need to, I'd rather focus on realistic scenarios. That is my approach, right? And this is why I don't have 2 million people following me, and be surprised that we get something better than telling you, oh yeah, 500,000, a million, and people will like it because sometimes we are like little children, right? And Christmas is coming by and everybody is excited, but it's, with these things, it's serious stuff. It's investments, etc. So it's better to keep our feet on the ground, and then we can have a head in the cloud, right? And you have both, right? You are grounded, and at the same time you can, have wishes and desires, etc. We have also be careful because, if we reach high values, then the crash can be even faster, because very be a crash. Okay, very be a crash. it's again part of these cycles of life and how market work, etc. When once we go too far, it doesn't matter if there are ETFs. It doesn't matter if you're seller. Maybe seller is not going to sell, but the ETFs are going to sell because we want to lock some of these gains. They are all long-term hodlers are the ones that usually sell because they have made huge gains. Maybe they also are strongly leveraged. Maybe they made loans against Bitcoin, for Bitcoin because we want to go up long positions, and they need to close them. So I think we have a crash, and then we should go back to the support line. So if we go, let's say we go to 200,000, and then we go back to 70, it's not quite the 80% that we saw before. It's more like much smaller than that. So that is my prediction, that we go close to 250, something like that, and then we go back to 70, and that will take about 1 year. And usually, so the big picture that I was trying to show you before is this, right? That we have one exponential year up. It's fun, it's exciting. Or sometimes, by the time we arrive here, it's also exhausting, because it's not going to be. Here I draw straight lines, right? When in a log linear chart like this, because unfortunately TradingView doesn't have a log of time, that is what allows us to see the power law, because the power law is a straight line in the type of chart. But when you have only the log of the y-axis, anything that's straight, it's an exponential. So these things are not exactly straight, right? But the total result, if you went up exponentially, the total result, right? You can draw a line and say, okay, this will be the equivalent of going exponentially up like that. Now, like for example, here we have almost like a. So it's not this. There are only other two tops. It seems that we had another cycle with two tops. This was smaller, so many people don't consider this a top, but yeah, it was, right? Kind of local top. Then the price corrected, it stayed flat for a long period of time. So there was an entire period where between April all the way to October, where kind of stayed flat, actually went down, they recovered, and then it started to go up again, right? This was kind of interesting cycle. This one was much more regular. This year, this cycle was really very regular in terms of going up. Not quite perfectly exponential, right? But close. And again, this one. And you can calculate the return, right? Like the equivalent. You say, okay, look, what if it was an exponential, so it followed this path? What is the equivalent? How much every day earning from this process. So just to give you an idea, this was more like a 1.1% a day, something like 1.01% a day, something like that. And this was more like 0.6% a day. This was 0.45% a day. So it went down, right? What is interesting when we come down, that is the other exponential down, it's very similar. Look at the slope of this curve. And also it looks very much like a straight line, right? As it's much closer to a straight line. So it goes down exponentially, of course, with deviations, it's never perfect. But it's interesting that it's very similar. It doesn't matter what is the cycle. So it's kind of, in a sense, more predictable when we go down, for this entire year. And many people will lose their mind because, we are going to reach this very high value, 250, maybe even 300. And then we go back with this trend, and this is about 0.22% a day. And it lasts about 1 year to go down. So this, and the total result of this going up exponentially, and then going down exponentially. It's like the bubble doesn't exist, right? So this is one of the reasons, even if people attack me or criticize me, but I tell you, look, when we come close to this, you should lock in some of your gains, right? Do whatever. Today we have so many tools. We have options. We have um, IBIT options. We have MicroStrategy options. You can buy puts and bet against MicroStrategy, maybe like using it as an edge to keep some of the value of your Bitcoin. You can sell a little bit of your Bitcoin, like 10, 15, 20%, then try to rebuy it here at the bottom. Now people feel that is a risk, but it's also a risk seeing your portfolio being $1 million, and then it goes down to 200,000. That is also a risk. People don't think, because we have this, that is dogma, think that, I'm just thinking always in terms of Bitcoin, one Bitcoin is one Bitcoin. These are memes, this is not rational thought. If you, we're still in a USD world, and if the goal is, to be prepared for that world where will not, USD will not exist anymore or will be pegged to the Bitcoin, you want to still think also in USD, because you are using USD to buy Bitcoin. So if you can have more USD here, and when you're there, you can use this USD that you got there to buy Bitcoin. Why not? It's a valid strategy. And I'm not a financial advisor. I'm just thinking aloud. I'm sharing some ideas, and you decide. Nobody's forcing you to do anything. You are free. Just I'm discussing possible ideas, possible approaches. Okay. So now let's look a little bit. I'm going to stop for a sec. Oh, okay. And then to complete the picture, right? Because I was trying to give you the entire picture. We spent 2 years along with power law. It's almost purely, this was like a perfect year, was almost textbook. The other ones had deviations. Usually when we go away from the power law, during these 2 years, we always correct and we go back to it. Like here, we were trying to correct and go back to the power law support. And then we leave it usually at the end of the 4th year, right? And then we start, the end of these 2 years, like around November, December, and then the bull market starts. So this is the entire picture. And what I did here to compare, basically, in this chart, I basically I look at 4 years in the past, then I shifted that 4 years, right, to be aligned with where we are right now. So what you are seeing here for the other cycles is basically where we were 4 years ago, exactly 4 years. So the years will not work. The years here in the scale, in the time scale, will work for this year, but it will not work for the other. But you can subtract 4, and you understand the months is the same. So this will be exactly where we were 4 years ago. This will exactly where we were 8 years ago at this particular day, exactly. So it's a very cool way of comparing where we were in the cycles. And this is the projection for the future, right? Okay, I'm going to stop here for a second and then take some questions. Then we can zoom in there and think about what we can learn as the bull goes, which kind of tools, which kind of things we want to pay attention, because we are leaving the power law, right? But we can still use a scientific way of thinking about the bull run too. So we can use all kinds of tools, and we put it in the framework of a power law because it gives us a reference. So I will do that in a moment. But first, I'm going to look at your questions. Okay. All right. So let's look at these questions. Yeah, so that, okay, so Letitia's, Gregor's, yeah, log regression band. I think, yeah, that is what Gregor's Rack says. I think this is what Ben calls the power law. He calls it log regression band. But it's the power law. There's nothing else than the power law. Do you think there will be a sizable correction now? Let's compare it in a moment. Let's see how it looks like with the previous cycle. It looks very, very similar to the previous cycle. In the previous cycle, it looked like it had a double top. So it's not impossible that we have a double top. So last time, that is my interpretation, right? Because when we look at the data is the data, and then you interpret the data, right? It is different from making up stuff because at least you have the data to anchor you, right? But it's still an interpretation, right? Even when you use data, but it's part of a process, right? So my interpretation of what happened last time is that COVID gave us all this liquidity. People were stuck at home because it was during COVID. They started to trade. There was a lot of excitement. They pushed the price up. We had an early top. The price deviated too much from where it was supposed to be. It corrected itself. And then, because of the cycle nature of things, Bitcoin still wanted to have a second top at the right time. And we had it. And then the winter started, right? The Bitcoin winter. So really the only time when we have a bear. And 1 year, right? We have 3 years green and 1 year red. And that 1 year red is actually coming from this crazy top. So, it's not really even a real bear. It's just correcting this crazy deviation from the trend. So I don't know. I'm more worried about MicroStrategy, and we can talk a little bit about MicroStrategy because MicroStrategy is not just going exponential. I posted a few days ago. It's an exponential, but it was moving like this, and then it started to go like that. So it's becoming even faster exponential, and then there was a correction, and the correction was, I didn't even brag about a correction, 20% correction. I didn't want to put the finger in the wound. If anybody got wounded, probably not, hopefully not. But just be careful with MicroStrategy because I think people are pushing it a little bit too much. We are trying to do too much speculation. Bitcoin, I think it's in a healthy path. It looks very much like the previous cycle. And then, yes, at a certain point, there will be a correction, but we are far from that. But let's see, okay? We go back to zoom in what happens. I wanted to give you the big picture first. TA has always turned me off from all the spaces it is with the power law. Yeah, exactly. So, my son does it. It says I don't want to impose my understanding, on him. He's also, of course, follows the power law, but he adds a little bit of TA. So, some people like it. It's good to have different approaches, but this is why he does his videos. I make mine. I never talk about TA because I don't think it's right. Saxon Smith is the student pet. Hopefully, it's not an insult. He comes here every single time. I love him. And he's always positive and excited. Ciao. Yeah, circa day, right? Means about a day because everybody, so this is what TF is. We all have these cycles, internal cycles that have to do with our physiology, whatever. Some people have it a little bit longer than a day. Some people have it late. And then, you know what? Reset the cycle, the sun. When you go outside, you look at the light, and the light, there is like the eyes have some receptors that are specialized in resetting your brain. This is why it's important to, I am the one, I tell you to do things, and I don't do it. I'm going to sleep when everybody else is wake up. But in theory, we should wake up early in the morning and get some nice sunlight, and that reset your circadian rhythm and makes it coordinated with the external rhythm of night and day. It's a really fascinating topic. They are coming up with a lot of medicine, like maybe cancer treatment coordinated with the circadian rhythm. It's a really fascinating topic. Maybe at a certain point I should have videos about all my studies about sleep and neuroscience of sleep, circadian rhythm. It's a really cool topic. Anyway, when do you think hash rate will be 1 zeta hash? We can calculate, because even I will have to do that calculation. Josh Smith is asking, when do you think hash rate will be 1 zeta hash? Now, even a hash rate, like some people say, like Max Kaiser say, hash rate leads price. Not true. The only place where it does, like addresses, is at the bottom. At the bottom, hash rate and addresses lead price. During the bubbles, they don't. Is the price leads everything. Even Google interest, everything. Price moves, and then everything follows. But we can calculate it. Because it's a power law. It's also a power law, a crazy power law of 12, and we can calculate it. I will come up soon with. So if you join us, you will have access to all these indicators. And right now, as far as we know, we don't have any indicator that directly shows hash rate addresses. But I'm going to make one where you can look at all the different on-chain parameters, and then you can compare it with Bitcoin price. We will do that soon. Hopefully by the peak, we have all like 20 different indicators, and we can understand everything about Bitcoin, and by the way, when you join, all these indicators are, even if I make 20 indicators, the same price, doesn't matter. All right. Do you own any Bitcoin mining stocks? No, I have IBIT, I have MicroStrategy, but I do want to buy some. I think it's a good idea to have I want to have a portfolio. I have a little bit of NVIDIA, but I want to only have Bitcoin related stuff, because I'm a crazy maxi, I play once in a while with some stupid coins. Like if I see Doge pumping, I buy for a couple of days, maybe with a little bit of leverage, and then I sell it and I buy Bitcoin. Because I'm not against playing with stuff like that. Why not? If you put $200, $500, $1,000, and you make a couple of $100, it's a dinner. I mean, I don't spending for the dinner. I'm spending it by more Bitcoin. How do you overlay each cycle of the chart? I did it through a code. It's not something that I think you can do easily. It's coded, but I will make this indicator available. It's not yet in the list, but I will make it available so you guys can use it, because it's really cool, right? You can compare the cycle, you can see where we are. It's really cool, and we'll try to also add all these labels if I can do, so you can see. You can have it as a kind of master chart, to see and understand everything else. I will do that. Okay. Do you think we get something like under 50 pullback to under K range fine? Yeah, I will try to. One thing I can try to do is try to kind of add some of these details, like what if we do maybe kind of almost reproducing the 3 different cycles, and we could play that game and say, okay, what if we look like the second cycle? What if we look like the last cycle? We can kind of, and maybe kind of randomize it just to give you a feeling of how it could look like, right? But it's very difficult, right, to tell. Now there is one tool that I want to develop for us. Is this guy called Sornet. He's a physicist, right? He was a geophysicist, and he developed this technique where when there is a major drop, and this is valid both for the huge big drop that I'm still expecting to be in November, but also local ones. What he sees are these oscillations. Looks like if you could zoom in, you will see people getting crazier and crazier. They start to buy and sell faster and faster and faster. And then they are called, And actually the price, it goes from being exponential to a power law, to a very local power law. That is really interesting. Usually power laws are associated with phase shift. When you look at when water goes to ice or ice goes to gas, you see these different things happening at all the different scales. The small little chunk, big chunk, infinitesimal chunk, almost at the molecular level. And that creates a power law in the distribution of the sizes or other parameters of what you're studying. And this is the same thing with stock prices, gold, even Bitcoin. He has an entire article. It's called "Are the I can put it in the chat. Are the let me find it. Are the Bitcoin bubbles? Are the Bitcoin bubbles predictable?" And his name is Sornet. He's one of my heroes because he's like a physicist that study finance. Are the Bitcoin bubbles predictable? You can look it up. His name is. It's a French scientist. He was actually here for some time at San Diego. I wish I met him. Here, it's a Royal Society. I'm going to put it in the chat so you can actually go and find it. Okay. And it's a little bit technical, but they have nice graphs. They show I didn't do it yet with the last bubble. We should do that with the last bubble. But if I develop this tool, we can create like kind of a monitor and then tell if we see these fast oscillations. And then in theory, we could predict, I know it sounds crazy, but you can predict few days ahead when a major crash happens. It doesn't get all of them, but some of them are characterized by this fast oscillation. The only problem that the calculation is a little bit computationally intensive. So, for example, we could not make a trading view indicator, but we can write a Python script, etc. Maybe I can make a channel in the Discord channel, and we can tell if this tool, we predicts any crash, So we can try that. It will be an interesting way of testing it. So I'm going to work on that and see if it is. And then, if I see something major, of course, I will also post it on X. But we will try to do it first in the Discord channel. But yeah, it's very interesting tool. Will be really cool. To be able to tell. At a minimum, it will tell us we are coming in a very frenzy territory. So, for example, if we want to do some of these future things, and then saying open a future position, etc., just wait. Maybe wait until the correction is over. Something like that. Yeah, so the question from JDK 050507 is, if we reach 200K in March, right, will you take some of the table? So, and Plan B is making fun of us. He say, by February we reach 200K and the power law people will sell their Bitcoin. Look, it's all about, and we can go to the other indicators, right? So let me show you the other indicators. So this is why we have 9 indicators, because the reason we have 9 indicators, and I'm not going through all of them. If you are interested, watch some of I post a lot of the training videos. I'm going to take out, by the way, this indicator has also liquidation levels. I'm going to take them off because they're a little bit distracting. But this is why we have 9 indicators, right? Because the thinking is we want to find a combination of things, right? They all support each other. All different converging signals. So, for example, we have deviations, right? Deviations are important. We have this indicator that is basically goes from 0 to 100, right? So as we come close to 100, independently from where we are in the cycle, it's a sign that probably the price is very high. It's very extended relatively to where we are. And if it is not the right place, because we also believe, no, it's not a question of belief, we go with the most scientific plausible thing, but we will continue to follow a cycle. This is why we make this. See, for example, here, this is it's like the clock, that rational root developed, but basically it's a sine wave of that clock, right? So here is where we are expecting to have a top, and if we have a top in March, that is, or April, an early top, let's say we have it here, it's not where it's supposed to be. But if a deviation is high, where we go to close to 100, so imagine, for example, we were here, right? Because it's easy to predict backwards, right? You will have to say, oh, okay, this is a double top. Yeah, sure, we reach 100, but let's wait until everything aligns, even in terms of time, etc. Right? You could have done that, but imagine you are there and you are freaking out because maybe the cycles are not repeating exactly like before. Okay, well, sure, we reach a top, but are we continuing to go up? Are we having a correction? So I will say there is, and we can write it down somewhere, maybe like a guide to power law thinking or something like that, right? And you don't have to accept it as a gospel, but as a tool that maybe you like parts of it. Make your own tools, use the information and take the pieces that you like, right? What I'm trying to do is trying to make it coherent. First of all, because for me, right, I want to have a coherent picture, but also maybe because if it is coherent, then it's useful to you too, right, to make it coherent. The coherent picture will be, look, I'm going to be cautious. There is a huge deviation. It's not happening at the right time. If it was happening at the right time, I will act my plan. So make a plan, right? What is that plan? Are you going to buy some options? Are you going to sell some of your Bitcoin? Are you going, whatever you decide to do, right? Or maybe I'm DCAing every couple of weeks. I'm going to stop DCAing, or maybe I do DCA where I buy USDT instead of buying Bitcoin as I come closer and closer here. And then the idea of buying this USDT is that I'm still putting money aside. I'm in this habit of putting money every week, great habit. But now I have a bunch of USDT that I can use to buy back Bitcoin when it goes back maybe to the yellow area. If you did that, because you don't have to wait until the green, you can wait the yellow, you could have bought Bitcoin at a much lower price. And some people don't care. I think seller doesn't care, right? Because he buys thousands of Bitcoin, hundreds of Bitcoin. For the small investor, you do care, right? That is what you're trying to do. You're trying to maximize your investment. So it can make a huge difference buying here versus buying there, right? So I will say the hierarchy is deviations. The deviation comes first because it will not be wrong, right? Let's say that you locked some of your gains here. You don't have to wait for this other top. You can do it here. Now, you can decide, say, because imagine it was, instead of being this top, it was this top. It was the top, this double top that we had here, right? The first bubble after the halving. And you sold here, right? You see here, first of all, you will not have done anything because in terms of deviation, let's say you decided that you don't have to wait until it goes above 100. You can do it at 90, 85, gradually. You can do it gradually as we approach. So you can start to do some of the things you decided to do gradually as we reach, certain deviation. Like, maybe as it starts to color red, you're doing it. And no, you're not have acted, but because it's not where it's not where it's supposed to be, but also the deviation is not big enough. But imagine you were there, right? Close, it was bigger, you sold, and then you're missing this one. So my suggestion is, first look at the deviation, how big the deviation is, and then also the timing. If the timing is not right, maybe in your plan, and it's the plan and the detail of the plan, I leave it to you. I can give you some suggestions. If you were planning to sell, let's say 20% of your Bitcoin at the top, maybe sell 10%, because say, well, look, still a huge deviation. Imagine that we actually went higher, right? We went higher there to the second top. You will be still ready for the second top, but you do something also to act on this. It's basically, this is the analogy I used a few days ago when I was discussing this was, imagine this is the GPS. You have a GPS is telling you, okay, it's ready, next, get ready to turn to the right. Okay, you get 100 feet, turn to the right. The 100 feet comes, you look to the right, and there is a building. There is not a road. What do? Do you go right and slam against the wall? No, right? You want to use the GPS, but the GPS could be wrong. Was much more wrong in the past. Now it's pretty good, but maybe in a rural area, maybe in a place where they didn't do very good mapping, it could still be wrong. You want to check the road, right? You're keeping your eyes open. So we are not doing things automatically. We reached 200,000. I never say, never, once. I don't know what Plan B or other stupid people say when I say, reach 200, they sell. I never say, when you reach 200, says. That is a projection of what to expect. I never say, when you reach that value, sell, right? We look at deviations, statistical deviations. We look at the other indicators, like we have this indicator that tell us there is a reversal here. This is called the Hurst coefficient. Basically, if it is above 0.5, it means we are trend following, and it becomes redder and redder. So when times come and there is a change in the price, this indicator starts to go down, and it lowers, right? It will reach a maximum of value. When you start to see smaller values, probably you reach a top, or at least local top, big, huge local top. That usually corresponds to big, large deviation from the price. So you can do something, and everything should align in terms of deviations, time, etc., and the other indicators that we have. And at a certain point, we were looking at liquidity, because liquidity, when in the past at least, so we have also this liquidity indicator. It was almost kind of a precursor or an alert system. It doesn't tell us exactly where the top is, but it kind of prepared us, right? Because usually what happens as we come close to the top, or even local top, we had a lack of liquidity. That is kind of a definition of what a bubble is, right? And this happened every single time. Like, look at this. If we continue in this way, where liquidity is going down and the price is going up, and we continue to be like this, where there is this disconnection between the two, we will not be able to use liquidity. I'm thinking that eventually liquidity will catch up. It almost has to. If we really want to go where we want to go, like 200, maybe even more, for sure, if we go to 500, that is quite unlikely, but completely impossible is not. But for sure, we will need a lot of liquidity, because right now I think we are pushed up by mostly ETFs and Sailor, maybe some other people that we are not aware of. They are somehow undetected, because this liquidity is supposed to detect that redistribution of assets, right? That is the entire point of coming up with an index like this. It's a secondary index. It doesn't mean at all that the power law is broken. It doesn't have anything to do with the power law. First of all, we are in a territory where we are not even in the power law. We are in this exponential behavior, But in general, I'm expecting liquidity to follow, right? So maybe my interpretation right now is that ETFs and Sailor are kind of front running the liquidity players, and the liquidity are getting ready. And I don't know, maybe they are waiting for the end of the year. A lot of companies do accounting and do taxes at the end of the year. So maybe this is what happens, before we see some big, huge movement of money, global money. It's, I'm saying that we should not kind of move our hands and come up with stories, but again, this is a story that is supported by the data. I'm making a guess about what could happen. We will monitor. We will see. We always open our eyes. Okay, price goes up, liquidity goes down. Am I going to predict the price is crashing because of liquidity? Right now, I don't see it. I'm just worried. That I would like to see. It would be nice to see that also the liquidity fall. Right, it would be a good sign. And it was useful also to predict where the peak is. Now, if we develop this tool about, this, I told you, Sornet tool, then we will have one more thing in our arsenal to tell us, well, okay, it's a local top, the price is correcting. So, let's do something, But that long answer to your question. So look at all these things, deviations, timing, the price, the value of the price. Almost don't worry about it, because the only reason why we said what to expect was not to act when the price is that value. Now, when the price reaches that value, we will pay attention. Say, okay, cool. We at least predicted this, because right now it looks like simple to go there. But if I switch off a logarithmic, it doesn't look that simple anymore. Look at this. We still need to go there, right? And okay, we have 1 year of time, but it's over there, right? Look where the bubbles were before. The other ones are invisible, right? And this was a crazy bubble we had last time. We need to go over there. It looks much more tantalizing. It looks much more difficult task to go over there when it's plotted in this way, right? It looks less easy, much easier in the log chart, but it's not easy, But if we reach it to 100,000, it's amazing, And let's see if it goes higher, And but it will be a sign, to be ready and to be, to take some action. But I never say, even once, when the price reaches the value, then do this. It's not how we use the indicator. Look at my videos of how we train people to read the indicators. That is not what we do. So that is what I will do. But the large deviation like these, they are so unique. Look at this. They are happening, almost never. They are associated with the tops. So if we have an early top, I will pay attention and do something about it. It's not a question of price, it's a question of deviation. Now, there is another tool that, again, we are going to make soon available. This is one of the two or three tools that are coming up soon. It's basically, and this is actually what Plan B. It's a very strong proponent of this approach, right? It's being invented, like almost nobody's inventing anything new in this field, but it's a known approach. But he decided to apply to Bitcoin, and in particular to use the power law. So how you do it, you use the power law. It's power law based, right? And then you look at the deviation from the power law, and then you say, okay, let me look at all the possible deviations in the distribution. So, you will have, if you look at all the different deviations, they will distribute, right? There will be a certain number of deviations that are around a certain value, It's almost like it's not really like a bell curve because it's no noise. If you take a Bitcoin and you subtract the trend, you get the bubble. But actually, it's another signal, another way of understanding it that is not noise, because in theory, if the entire story of Bitcoin was the power law, when you subtract the price from the power law, you should get noise. You should get a bunch of random dots. And that actually was one of the criticisms of some of the finance people, some of the finance PhD that don't have a lot of deep understanding, I'm sorry, about these kind of things. That was a criticism. Oh, it doesn't look like a Gaussian distribution, right? The Gaussian is another name for bell curve. The data should distribute like a bell curve because it should be like an average value. And as it go away from the average value, it becomes less and less probable in both directions, right? Like large deviations in both directions, like both below the power law and above the power law, should be less and less likely, right, as it go away. But it doesn't look like that. And it doesn't look like that because when you subtract from the power law the price, you get the bubbles. And the bubbles are like a sine wave, look like a sine wave. And so it's another signal. There are two signals. There are two signals on top of each other. And so that is kind of a limitation, a little bit of this approach, because you're treating it. This approach doesn't need to be a bell curve, what are called the residuals, what is left over. It doesn't need to be like that. But if a data is too much like a signal, it's still not completely ideal, because it's still expecting some kind of statistical distribution, and really what you have is it's kind of bimodal. If you have a sine wave, a lot of time will be spent below the power law in a certain region and above in a certain region. And in fact, it's not even like that. It's more complicated because we just say when we are in the 2 years, right here, we are behaving like a power law, and here we are behaving like an exponential. So the stats are not even uniform. They are all over the place. But okay, you can still pretend and say, what if it was noise? The residuals are noise. Then look at the range of distribution. It looks like it's really peaking here, and then it drops very, very fast. But there is a long tail, and so basically, you're saying these are how likely is that the value of the price will be in these regions. So you go from like 0.1%, which in that case will be the largest deviations, negative deviation, right? So basically it gives you a bottom. And then if you go away in the other directions, these are the top. But you see, the way to interpret these, like if you go all the way here, basically, I think this was like 99 percentile or 94. That means only 6% in the entire history of Bitcoin, basically here was above it, right? The reason why it's wiggly, by the way, differently from the charts that you saw maybe from Plan B, he does it where it takes the entire history and then he applies these graphs to the entire history. Like, it's kind of okay, but a little bit misleading because yes, the entire history when you're here, but then you make look like the graph will have been very well behaved here. It will not have, because when you so I calculated here every time I calculated only using the past data. That is really is the way to do it, because it's a little, otherwise you give a false impression that this thing was always perfect like that, right? But in the beginning, the stats were messy because we didn't have a lot of information, right? So see why they are all over the place. But it's okay because they stabilize, right? You see how they stabilize. Here, for example, we got spooked by the FTX event where the stat changed all of a sudden because it was a big drop, and So it's trying to adapt to that, but it's okay. By the time we are here, it should be pretty stable, right? You see how stable it is. So we can project it to the future, and we can use that as another tool. And the reason, with all these caveats that I mentioned. So again, by itself, I will never use it, but together with the other things, we can use it. So this is called the quantile approach, quantile regression. So the interpretation of this will be, imagine that we had a bull that is as crazy as one of these, right? And if you want, we can even add 99. So we actually include even the peak of these craziest bulls. So if the stats were as crazy as the most crazy bull that we ever had, that was, when Bitcoin was $30, then what will I expect? What will I expect? Well, you will expect to go all the way there. And I did it, for 2026 when we are expecting to have a peak, and that is 550,000. So basically, it's telling us we can reach 550,000, but we will need to see a bull run that was as crazy as the one in even before the halvings, like the first bubble ever, like this. Well, that one actually went even higher. So maybe okay, let's say maybe this, like this first one after the halving. That one, we were going up in average more than 1% a day. And when somebody tells you that something grows like 1% a day, like I invest in this bot is making 1% a day, you can almost guarantee that it's a scam, because it never happens. It did happen for that bubble, but Bitcoin was a few $100s, right? And it reached $1,200 for that bubble. And right now we're talking about 100 and maybe reaching 500,000. So it's almost impossible, right? So this is one of the things that these people that mention 500,000, they don't understand it. It will require Bitcoin to behave like when he was a baby, like a little toddler. And right now we're talking about an adult. Bitcoin is an adult. Adults usually don't behave like toddlers. So take it with a grain of salt, right? So it's actually a powerful tool with the right interpretation. So if you interpret it correctly, because if you interpret it like, I don't know what Plan C is. This is not a personal critics to Plan C. Okay, I like Plan C, is my friend, etc. But most of what he learned from, I'm not saying this to diminishing his work. He learned it from me. He didn't know anything about the power law. I actually taught him, like one-to-one. And he's still contributing, doing great things. It's great that many people check and do their creative work. But you have to be a little bit careful, right? I think really, not because I want to say all these amazing things about myself. I think in terms of experience, both in terms of being in Bitcoin, for 13 years, but also analyzing in different fields, this data in astrophysics, in neuroscience, in finance. I don't know. I don't know anybody else, really, literally, in the entire field. Like, tell me anybody else, okay? Cohen is an engineer, but I don't know. I don't want to say too much, but this doesn't mean that you have to believe everything I say at all, because this is not how science works, right? You don't believe anybody, but sometimes I see people misinterpreting stuff, right? So, for example, a misinterpretation, if anybody that works with this quantile will tell you, oh, there is a chance, right? Like in that movie, oh, are you telling me there is a chance? No, not really. Yes, in a way, but not really, because you have to understand what it means. What is the interpretation? Interpretation is all these are not even at the 99%, because you say, okay, I'm still telling you that it's very rare because it's all the way over there, but it's still within the realm of possibility. Well, it's in the realm of possibility if you think that we can behave like we did in 2013. That is quite impossible, right? So, but it's cool because it still show you all the possibilities. Okay, I mean, I could add lines here and say, okay, if aliens come, if you know, this line here is when aliens come, and if World War III comes, and it's okay. It's useless if you start to do things like that. But okay, this is another tool that you could use, right? You say, okay, we are relatively to that, right? So, for example, if you were using it here in the bubble, you start to see, do I really want to push it all the way where I'm thinking that, by the time you ride to this red line, right? And this was like performance of similar performance to the previous bubble. What that tell us? That tell us 276. You see, if we did, that is cool. Okay, that is another way of using this chart. Say, all right, am I expecting to go even higher than what we did last time? We are, we are here. So again, it's not the price, it's more like how big the deviations are from a statistical point of view. If you arrive here and you're on this line that you see kind of was more or less where the top of the last cycle was, and we are like around 270, are you going to think that it's going even higher than that? I think it's unlikely, very unlikely, because again, this was a $60,000 Bitcoin. This is a much higher Bitcoin, right? So it's going to be more and more difficult to continue to go up. But again, these are tools. It's already amazing that we have these tools at all, and we can make this thinking, and then you can use it to take your actions and your bets, right? It's all about how you manage the risk. And risk, I want to start to make you think in a different way from the hodlers, the mobs, because we are not disagreeing. The bottom line is that I will never tell you sell all your Bitcoin. I will never tell you even to sell more than 50% of Bitcoin. By the time you reach 50%, if you want to really push it, you're not doing something that is, I think, good management of risk. Good management of risk probably is close to 50%, because risk goes both ways. You risk if a price collapses, and you could have used that gain that are there in front of you to buy more Bitcoin. I'm still think that you don't want to sell it to buy. And there are people who say, oh, if you sell it, I heard other influencers say, if you sell it, then you will be tempted to use it. What are we talking about? We are Bitcoiners. We will not be in this thing if we're tempted to sell anything and buy other stuff. Treat it like if it was Bitcoin. It's a virtual. Think about that USDT as a virtual Bitcoin that you're going to get when the price corrects. And you don't have to wait until the bottom. Do it gradually as we go down. Once we are over this dangerous zone, start to buy back. Okay. So that is what I'm suggesting. I'm going to take one more break and check all the questions, and then let's zoom in for a few minutes because it's already going a little bit too long. And we spend a little bit on what we can do almost on a daily basis to know where we are going next. Okay, what are some of the tools? So maybe we can have another meeting soon and discuss more that more in details. Because it's my first video after the bull run started, so I want to give you a picture of where we are. So I'm going to look at your questions and see. Okay. Yeah, all this. So look at, so the question is, and I don't know where you're coming from, if you're answering from X or the YouTube, but I gave you, even if you're an X, I gave you the link for the X. So, okay, trying to answer this question says, are these charts available publicly? Okay, this is a C*/E. C. Okay, yeah. So if you go to the YouTube, version of these and look at the comments, I gave you a link and a discount for 40%. So you get all the indicators, others that I'm developing, even the one that I'm discussing. You get part of a community. You get to be part of a community. So this is the question, actually. This was the question. Oh, no, this was not the question. I'm going to answer this question. And you have a 40% discount. So come to the YouTube video if you're watching this from X or somewhere else. And you should have a link for the YouTube video. Go to the comment, look at the discount, and you can get 1 year discount or 1 month discount, 40%, and then you get all these indicators for almost nothing. With the discount, it's close to $10, and then it will be $20 a month. It's not very. I'm trying to do it almost symbolically. It's not a lot of money at all. Okay, and then let's look at the other questions. Yes. Oh, for the option market. So Campi is asking, do you think the Monte Carlo indicator will be good for the option market? So I'm doing this Monte Carlo indicator too. Is one of the indicators that I didn't show you already. We are going to do it in a moment. That gives us projection for the next few days. We can do it 10 days, up to maybe a month. And yes, it's going to be very good for the for options. And in fact, I'm also writing a Python script that is a little bit more sophisticated, and it will be another tool that I'm going to make available to all the Discord people, where we can run this algorithm almost in fact, we could try to make a table. Again, it's not financial advising. I'm not a financial advisor. I'm trying to help you to think and give you tools, okay? So I'm going to make this tool. I'm going to code a code where when we are in the power law, it will know that we are a power law regime, so we can make predictions and try to use the option. Like what is called the Black-Scholes equation, or maybe some other similar tool. We are going to modify it and try to use, again, math and physics to make predictions of a range of possible value for options, right? Take it with a grain of salt, because I'm learning myself. I'm not going to sell myself as an expert in options. I want to integrate this knowledge that we are developing with the option, and I'm learning. So we are doing it together, So if you are interested, and if there is any expert who wants to join and help us in developing this tool, great. But I'm already letting you know from the start that I'm not an expert. I'm trying to learn. I know the basics, I understand the principles, and I just want to use mathematics and physics to develop tools. That is the entire idea. Ok. Ciao professore, grazie per il lavoro, for your work. Thank you to follow my video. Okay, for the record, my question had nothing to do with Plan B. I don't know what was your question, Giovanni. We hit. Oh, it's so much. Oh, okay, yeah. Yes, GDK, because GDK wants to make sure that it didn't have anything to do with Plan B. Yeah. I didn't take it in that way. I'm just saying Plan B. This is what Plan B does. Is trying to make fun of us. But the message was, it doesn't have to do with the price. When the price arrives and we come close to that, then we will see, are we were on target, we were not. Really, the main component, I'm curious, because we will really interesting if that decay continues to be real, because then if it is real, we will have to go to some theory level and understand what is going on, why even that decay is regular. What the heck? Bitcoin has all these regularities, even that decay will be. I want to understand why, what is going on, that will be really cool. Now, if it is not true and is broken, we go to 300,000, I'm happy, because we all make more money, but okay, we are not going to act only on the price. Are very different categories of distribution, nature of those most things? Yeah, there are many. Actually, most things do not follow that curve. You know why? Like many times in mathematics, we go to the simplest possible thing, right? Like, for example, this for century and millennia, the world was made of triangles and circles and square, because it's easy for human beings to understand squares and triangles and circles. And then later, as mathematics develops, like in recent times, like there was all this work from Mandelbrot that you probably heard about, right? The idea of fractals. And he and other scientists started to say, look at the cloud. The cloud is not a circle, kind of, okay, I can approximate it at a circle or something like an ellipse, but it's not really. It has all these intricate forms. It's very complex. Look at a tree. Okay, maybe a pine tree looks kind of like a triangle, but not really, right? It's, you go there and there are all these many branches, and say, which kind of mathematics we can develop to describe something like that? And they develop all these very cool mathematics of fractals. And by the way, fractals are kind of causing with the power laws. They are also scale invariant. In fact, I have these beautiful books that is called Fractals, Power Laws. Mention all these very interesting things that may make part of this branch of science that is called complexity theory, where we study all this very complex system. And most of nature, to be honest, is like that. It's very rare to find. In fact, in a way, you never see like a real triangle, etc. But the reason why you see a lot of bell curves is because there is this theorem that says if you do a lot of averaging, you average even things that are not distributed like a bell curve, but then you average them together, etc. Eventually, everything goes to some kind of bell curve. But the problem is this, that if you look at the phenomenon itself, locally or temporarily, it doesn't behave like bell curve. Like, for example, when I was working in neuroscience, I found this article because I was coming in as a physicist, like I'm coming in here like a physicist in the field of Bitcoin, and I was surprised. Everybody was thinking about almost anything we studied like a bell curve, and all the stats, even because many of them don't understand really the stats and how they use it. Like, they use this method, but the method implies that the distribution, it's a bell curve. Well, the method will be wrong to calculate an average, to calculate a standard deviation. Some of them, like clinical studies, that they will, people will be treated based on a drug or based on an intervention, assuming that there is this bell curve. And then you look at the data, and it's not a bell curve. Like, for example, I'm giving you a very quick story. My boss was telling me about these subjects that they have a problem sleeping. We have like insomnia, okay? We had a 3 category. We had a control group, very good sleepers. Then we had these crazy people that it's evident. You look at all their physiological data, they sleep like horrible. So it's obvious that they are insomnia. Then there are strange group in between that they go to the doctor and say, I don't know if one of you is among these. They say, hey, look, my life is terrible. I didn't sleep last night. I have not slept in the last week. I am for sure insomniatic. Please do something with me. And then, okay, come to the lab, right? They come to the lab. To the sleep lab. We study them. We look at their EEG. We look at everything. And if you assume that people follow this bell curve, there is no difference with the control group. No difference. You cannot find anything. In fact, many doctors assume these people are crazy, that they have, they want attention, they have some kind of, illness where they believe they have a problem, but they don't, it's more psychological than physiological. Well, I say, can I get the data? Can you give me the data? So I got all the data, and I started to see that the distribution of their sleep, in particular this thing called slow waves that are very important for deep sleep, they were not at all normal distribution. They had like a long tail. And nobody was considering that. And instead, I did. I came up with a diagnostic tool based on understanding this log distribution. They're called log normal distribution. And all of a sudden, I was able to separate these people from the control. You had three distinct groups. You had the control, you had these weird people in the middle. They were right. They had a problem. Turns out then, as you go deeper, because once you find a pattern, when you go deeper, we had a problem with this area of the brain, the parietal. Everything else was sleeping beside this area of the brain. This area of the brain has to do with attention. So we were feeling like they were sleeping, and most of their brain was sleeping, but they were alert because that area of the brain was active. So they felt like they were awake. They were not awake. They were sleeping. It was a problem because, that consume energy, makes you stress. You feel that you're not sleeping. So you need to fix it. But now you know what is wrong. And these people are different from everybody else. So you see, this is one of the things where you come in with a different approach. You're trying to understand things scientifically, use all these tools from physics. So I was very surprised. I was asking them, what is the distribution of these low waves? And these were like world and renowned sleep doctors, but they are doctors, medical people, and they have no clue what I'm talking about. It's like I'm talking a different language. And I looked everywhere in the literature. The only paper that mentioned this problem, not in this particular context, but in the entire field. If you want to read it, it's a really cool article. It's called The Log Normal Brain. And by the way, log normal distribution, they are a cousin of power laws. They are very much related to power law. The log normal brain. This is called. By the way, this guy also has a fantastic, more like kind of popular book, The Log Normal Brain. You can look it up. The Log Normal Brain, and he has a book that is called Brain Rhythms. If you really want to read a very cool book about brain and rhythms and patterns and cycles, this book, this guy claims that the rhythms that we observe in the brain is the language of the brain. This is how the brain talks. The neurons talk with each other, all these frequencies, all these patterns, really super cool stuff. And I met him at a conference in Chicago. So I went to him and I started to show all these graphs, right, of this log normal distribution of his low waves, because he was talking about many other things that, according to him, follow these weird non-linear distributions. But he didn't talk about sleep because, everybody specializes in things, and they say, listen, I read your paper, I agree with you, I'm a physicist, look at slow waves, they follow, nobody knows. In fact, I publish a paper on that, right, that they do log normal distribution. And he say, it was funny, this European guy, from Hungary, and he say, oh, now you're my best friend. This is what he said. Let's go and eat together, So we went together. He had like an entourage, and it was just me and him talking about power law, Pareto distributions, all kind of things like that. Like cool stuff. The ants work more, the ants they work less. It was really, really cool discussion. But yeah, all these things are really interesting. People think, we have like some paradigm, like many people have paradigm about Bitcoin, or Bitcoin does this, it's not predictable, or maybe it's an exponential. It's not an exponential, it's a power law. It behaves a different way, right? So you need to look at things with new eyes. And physicists are very good at that. Like we are disruptor because they train us. We go in territories where, engineers usually use the difference between a physicist and engineers. We are like the Marines, we go there and create a bridgehead, right, where there is nothing. And then all the other troops arrive, right? That is how it works. Because we need to go in area where nobody knows anything. Like, okay, we are exploring a new area, nobody knows what is going on here. And then when we find some patterns and some understanding, then the engineers come and they use that information to make things, technology, etc. But we open the field for everybody else. So we are trying to think out of the box, let's say. So that is a good question. Okay. And I'm looking for other questions. Are there different categories? Do we answer this? I totally understand the struggle you have been through. Yeah, exactly, right? I love more people joining the field so we can be like a little army, of us and bring in understanding. Because Bitcoin, differently from everything else, in theory, you could apply these to stocks, etc., right? Trying to understand them scientifically, and people do. There is an entire field called physics that tries to understand economy, finance through the lens of physics. But Bitcoin is almost perfect for this, right? This is what I'm trying to say. It's so unique. It has all these regularities that nothing else has because it works more like a network more than working like a normal asset. This is so different. And it should not be, I don't understand why people want it differently. It's not amazing that it can be predictable because you can have both, right? You can have this incredible growth and at the same time the bubbles where you can play a little bit and make huge gains and buy more Bitcoin. It's the best of both worlds. Why will you want it to be different, right? Why do you want the power law to be broken? Not because of me. You're not doing anything against me. I want to understand Bitcoin. If Bitcoin wants to do something else, then okay, we will try to learn from Bitcoin. But I want to, if I had a choice, I will want to continue to be a power law because when it's predictable, we know where we are going, we can make long-term predictions, we still have a bubble, we still have a lot of volatility, it's still fun, it's the best of both worlds. Why will you want it to be? Because for the people who want it to be broken, well, it can be broken on the upside, it can be broken on the downside. How do you know that it's not going to crash to zero? Well, the power law gives us some certainty about that. It's not certain because nothing is certain in life, but because of scaling variance, it's a strong principle that tell us that very likely will continue to go up and scale up in this way. So I don't understand why people like it differently. I don't know. It's weird. And Chief Mortal Scared, I'll say, great to finally hear you live. Thank you. I will try to do this more regularly every Friday so we can meet each other. All right. Let's keep it another 10-15 minutes. And then we can see each other next week. Hopefully we go above 100,000. Maybe we have a special episode if you go 100, and then we can use these tools on a regular basis. So what is the approach, right? So what happens during the bubble? Because we're leaving the power law. Now everything is exponential. And now we can try to understand what happens on an exponential level, right? Like using the exponential tools. So in a log, so you see how in the trading view, you can turn off and on this log thing, right? So if I turn it off and I look at the behavior of Bitcoin, it kind of looks like straightish, but not quite, right? It curves. And that because exponential look like J's, right? They look like J's in a linear chart. Now, if I go to the log, it looks much more linear. You see? That is when you know that Bitcoin definitely is behaving like an exponential. We are not in power law territory anymore. Now, exponential, if you choose the origin very, very far away, that is one of the things that I was disagreeing with Frank Kruger, right? He was saying, oh, this looks like an exponential, like a power law. An exponential, it looks like a power law if you take the origin far away, because it's non-scaling variant. So if I zoom in an exponential, something that looks like a J, and I look a little bit of a chunk of that exponential, is going to look like a straight line. But yeah, this is not what is, but definitely something that is an exponential will look like a straight line in a log linear chart and not the other way around because, of a scaling variance principle. The scaling variance, and, a power law, unless, again, there is no way that you can zoom in a power law and it will look like a straight line. That is part of unless you're doing a log graph, right? But if you're looking at log linear chart, it will look curvy, and so this is not a power law. It's an exponential. Of course, it has bumps, etc. Right? Now, the crazy thing about this exponential, now you can calculate, right? You can say, hey, how much did it go up in this crazy exponential, right? Wherever it started here, right? So it went up all the way from 67. I calculated the other day. Right now, we went a little bit more up, but it was close to kind of like, what did we find out? It was more than 1% a day. We can redo it. So this is one of the things I invite you to do, draw a straight line. So this is one of the things that you can play, right? When we have this exponential behavior. And TradingView has different tools, but okay, let's do it together, right? We are close to 99, right? Say 99, right? 99,000. And this exponential behavior seems to be, okay, this could have also been exponential, right? They can draw a straight line here, say started to actually leave here, but that means that it was exponential like this and it started to go faster. But let's use this latest branch, right? So we went from 98 all the way to 68. So I'm going to do a couple of weird things, and let's see if you can follow with me. Okay, so I'm going to take this 98, and you don't have to put all the zeros, right? Take 98 and divide it with the price that we had at the start. The start was, we can say, 68. Okay, we are doing it roughly. 98 over 68. That it's kind of the answer is already there. It tells us 42%. It's a 42% because if you take this ratio, you get 1.44. 1.44. The interpretation of the ratio is that 44%. That we went up 44%. Now, one way of calculating what that means in terms of returns. Returns is basically the price today over the price yesterday. You take the power of 1 over 30. 1 over 30 because you're trying to find out, imagine we did 2 days, right? 2 days will be whatever change in price, right? The ratio today. So let's say we went up 1%. So 1.0%. Let me write it down in the chat so you can follow better. Okay. I'm going to write it in the chat. So let's say I add 1% gains, right? That will be 1.01. All right. So if I add 2 days, it will be 1.01 times 1.01. So this will be 2 days, right, of this average gain. And so you multiply these two, that it will be your return in 2 days. If I do it 30 times, because it's a month, then I will have to multiply this 30 times, right? 1.01 times 0.1 times 1.01, 30 times. That is equivalent to take the power of 30. This is what the power means. And you can calculate. If you do that, whatever we get, I think we get close to that number, right? So 1.01 to 30, we get 34. So we need to know what the real, because you see, it took about 30 days to go there. So the way to do that, we will take 1.44, whatever that value we got from that big ratio, the big change. Then we do the inverse of taking the power of 30. It is 1 over the power of 30, like this. I just put it in the chat. And so if I do that, you can do it together with me. So I do 1.44. I take the power of, use parentheses, okay? 1 over 30. It gives me 1.012, Okay, so that the answer of that 1.44 take the power of 1 over 30 is 1.012. So it's kind of fun because then we can say, all right, this is what we did in the last 30 days, about 1.2% a day. That is crazy. Okay, it's completely absurd because if that continues, right, another month, we do another 40%. Okay, maybe we can do it for another month. Can we do it for 6 months? Okay, let's see what will happen. If we have 1.12, now you take the power of the 2 months will be 60 days, right? So you take the power of that to 60, you get 2 times. Okay, I would love in 2 months to go to 180,000, right? Because now you multiply by the price today, that will be 180,000. What do you think? Can we get to 180,000 in 2 months? If we cannot, and you think that is a little bit crazy, something has to give, right? And at a certain point, that slope needs to become a little bit smaller, or maybe we have a correction, maybe we stabilize it. So this is one way of monitoring what is going on, right? So just to give you a feeling, in average, if we reach 200,000 in a year, that growth is more like 0.32% a day. So that gives us 200K in a year. So, if that is the case, then, very big corrections. This is one of the things that we know that we cannot sustain this growth as we see it right now. Right now, maybe there is exuberance due to the elections, people are very excited, Christmas is coming, but it's quite impossible that we sustain. This is why when people say exponential, they don't realize what they are talking about. The beauty of a power law that we can get this long-term growth on a sustainable pace that it's reasonable. With exponential, right? Let's play these games. What will happen if we do it for 1 year? If we do it for 1 year, that is 365 days. If we continue, it will be 77 times, right? 77 times 90 or 99, like 99, whatever it is, we will get close to $7 million, right, in 1 year. You think it's possible? No, right? So this is one of the things that I want you to reason and think, right, that you can do yourself. Now, I develop a little tool that is like actually an indicator. It's actually a volatility indicator that does this automatically. I have a table. I don't have it. You guys don't have yet this table. I'm going to update. So you have this table. And this table, what it does is calculating the returns over a certain period of time. So, for example, you can choose 90 days, 30 days, right? Like, for example, if you do 30 days, like we just did by hand, you go right, you click a little bolt, you choose 30, okay? And now is the white line is the average returns over 30 days in a moving window. Then this table take the latest result and extrapolate it to 1 year. And so, like, do you remember I told you 7 million, 75 million, whatever? It's kind of close calculation, right? It's saying in the last 30 days, we did these type of returns. And if you extrapolate the returns to 1 year, we will make $8 million, 83 times more than now. But it's absurd, right? And it shows what is the comparison with power law alone. Power law alone will be 137. And then we do it in March. We can put some intermediate date. Maybe we can do 3 months, 6 months, 1 year. I can add more lines to this table. But this is one of the things you can do. Now, what I notice that historically, usually the top is predicted, well, mostly because it takes 1 year to go there, right? So if you go to the top and say, okay, what was the value over this entire year, the average value, if I do it over 1 year, of course, it will be at the top, it will be the correct value, right, to give us the top. But if you play that game where you look back at 1 year, it will be more and more precise as we get more data for the bull run. But 1 year, right, we get the 260,000, right? If we take last year. So, but you can try different things like 180 or whatever. It gives us a feeling of how fast we are moving, basically up. And if we are moving too fast, we are due to a correction, because some of these results are absurd, right? I don't think we were going to get $8 million. So this is another tool. Another tool that, and then maybe we can stop here. It's what they call the force field. So what you're looking at, and these are indicators coming soon. I make these indicators, I test them, and then I ask TradingView to approve them. We have this approval process where we make sure that you're not, in particular, if you are asking people to, it's like a invite only script. They want to make sure that you're not cheating or you're not doing something unethical, whatever. It's a good process, but it takes a few days. Only problem, they never tell you, oh, it's approved. Like you have to guess that enough days are passed by and they didn't tell you. If something is wrong, they let you know. If something is good, they don't let you know. So my safety is like I let it there for several days. If I don't get a bad comment, it's approved, and then I give it to you. We are going through that process right now. But what this does, it calculates the slope. So every day, you can try to fit the power law through these few points that you have over a day, right? It's kind of silly because you need long amount of time and long changes in price. But you can do the exercise, right? You say, okay, what if I wanted to fit a power law through the few points that I have for the day? What will be the value of the slope, right? And this is what you're seeing here. It's a line that has that slope for that change in that day. Now, the curious thing, you can plot all these slopes like little dots, right, in a graph. They average to the power law, the general power law. That is a demonstration that, scaling variance, because I could do it with minutes. I could do it. I think I never tried minutes, but I tried like half an hour, 1 hour. Will be interesting in minutes because actually the block is 10 minutes. But, does it work even smaller than a block? But I don't know. I didn't try yet. But this is over a day. And steeper is the line, steeper is the slope, right? And it's really cool because it kind of gives you a feeling. Unfortunately, when you do these more complicated things, because I love TradingView, but it has a lot of limitations. Like, for example, it doesn't allow us to go, I cannot draw more than 500 of these guys. I can shift them so you can see different areas of where it goes. Like, let's try to do it. Like, I can show you. I think in this one I cannot do it, but in this version. But you can. I will add an option where you can shift it so you can see how it looks in different regions, right? When we went up, when we went down. But in general, what I noticed that when a bull run starts, and by the way, the coloring here is so this is the slope of the overall path, right? Overall power law over the entire history of Bitcoin. If a slope it's higher than this, it becomes green. If it is lower, it becomes red. So it basically, green means we are outperforming the power law. Red, we are underperforming the power law. And usually during the bull run, all these little slopes are outperforming every single day. Like we never go down the power law for some reason. And so they continue to be green. So, and if they turn around, it's usually a major correction. So this will be another way to know that. And usually you have some warning sign because the correction, will be, it will let you know in advance that we are ready for a correction. We'll start to see this little green, red dot, and then there is a correction. So it will be kind of alarm that something is going to correct itself, So it's actually a pretty good tool to use during these bull runs to let us know that there is a correction. And also, I added this Monte Carlo simulation where basically, based on the stats of these slopes, it's trying to project a possible path. It does it for 10 days with this shaded area. So right now, for example, the way you do it, you look at the intersection between the straight line, that is basically the most likely path, and the shaded area. So that intersection is about 104, 105. And these are the next 10 days. So the next 10 days, it's supposed to go to 104. Let's see. It's all stats, but these should be pretty good stats because they are local stats. It's more difficult to predict very far away in time, but locally, it should be pretty good. And these, basically by the end of the year, we should be close to 130 or maybe even higher. So this is a pretty cool tool that we can use during the bull run to kind of know where we are going. We're going up, we're going down, how fast we're moving, and so on. And this is a possible range of value. We should be within these, most likely. Okay. So I think this covers a lot of information. Yeah. And okay, I'm going to read some of your comments and then we can conclude. A lot of people also don't realize 10% up followed by 10% down followed by 10% up in Chitter tends to 0. Yes, right. We want more pull ups than downs. And usually this is what happens, but it can be during a bull run. Sometimes you do have 20-30% corrections. It can happen. And let's see if we can. It's I never closely follow the bull run as I'm doing right now with all these tools, so I'm still learning myself. But these are some of the things that, as a scientist, I would like to see, and tools that we can use. Like these futures. Like DCA. I'm very happy about this bot that I'm using. I'm making quite good money because it does basically retracing. I didn't develop. I'm working with this company that is allow me to use their bot. I'm doing it on Bybit. I need to talk with them and see because somebody asked me, could we follow your trades with because Bybit has an option where you can follow like somebody. I want to see. I don't want everybody to follow. Maybe the Discord people or whatever. Let me see what we can do. But that could be a cool thing because if you can follow my trades, then because it's a fantastic tool, but it's mostly meant for the serious investor. But let me talk with the company. Let's see what we can do. Okay. Yeah, we could maybe have a simpler version or something. But it's one more tool. Like you don't have to. We are not talking degen. We are not talking buying these stupid coins. We are trying to see, okay, is there a little bit of a push, a little bit more aggressive, in particular if I don't have a lot of Bitcoin, where I can grow a little bit, without being very careful, being very aware, being very, making a plan and manage the risk, right? You want to manage your risk where it's like, for example, the algo I'm using, we are using the power law support. We are losing this power source. We calculated and I'm opening positions that relatively to my collateral is almost impossible to get liquidated. We'll have to be some crazy black swan event like COVID or something and very, very quickly happening. And there is always a risk, right? A meteorite can come and kill us all. So I'm not betting my entire portfolio, right? A small portion. So it's always a game between upside and risk, right? And you want to make sure that you have more upside than risk. This is how it works with everything, even just hodling. Hodling, people don't realize there is some risk in owning Bitcoin. You always have risk. Bitcoin makes scientific mathematical investing more reliable. Yes, absolutely. Differently from everything else. This is why I don't even want to look at anything else. We didn't talk about MicroStrategy. It's such a complicated topic. Let's leave it for another meeting and we can go back, because I'm very supportive of MicroStrategy. I think it's an incredible positive thing for the field. I'm a little bit worried about people using it too much for speculation, because it could impact even Bitcoin. Right now, I think it doesn't. It's probably isolated. If something happened to MicroStrategy, but if it becomes too much of a big of a game, don't use it against me, or don't be mad at me because I'm saying supportive and everything. But people do crazy things. It could become another FTX, or at least a smaller version of FTX. We don't want too much instability. We want to keep it, and people will do people. I mean, we cannot stop them, but I will be careful. About use it, but with caution. Again, it could be maybe a very small portion of your portfolio where you're trying to be even more aggressive and you're doing certain things. But let's go back to MicroStrategy in another meeting. This has been long enough. All right, guys. Thank you so much to spend Friday evening with me. This was fantastic. Let's do this again. Okay. Thank you so much, and hopefully we see $100,000 Bitcoin soon. Bye, everybody.